Every single day, trillions of dollars are moving through the global economy. Think about it. Governments are building massive infrastructure. Banks are approving millions of loans. Businesses are expanding, and millions of people are receiving their salaries. On the surface, these all look like totally unrelated events, right? But right beneath every single transaction is this deeply interconnected system, shaping our growth, fueling our investments, and, sometimes spreading financial crises. Welcome to this explainer, where we're going to map out the hidden network that literally powers modern civilization. So, let's dive right in and totally flip how you view the global economy. What if I told you that money alone doesn't actually power the economy? Credit does. By the end of our time together today, you're going to stop seeing governments, banks, and businesses as these separate, isolated things. Instead, you'll start seeing them as vital components of one vast, breathing, global credit machine. But first, a quick professional note. This video on the channel Blocks Bonds Funds is created for educational and informational purposes only, and does not constitute financial or investment advice. All right, let's get into it. To really get how this machine works, we've got to start at the foundational level, the bank. We usually think of banks like giant vaults. You deposit your savings, and the bank just acts as this passive middleman, taking your cash and lending it out to someone else. Well, that is the textbook myth. The economic reality is way more powerful and honestly so much more fascinating. Banks don't just shuffle existing money around. They actively create deposit money when they lend. And look, this isn't some fringe theory. If we look directly at the Bank of England's aggregate balance sheets, we see the absolute proof. When a bank makes a new loan, it's not going into the vault and handing over your cash. Actually, both sides of the bank's balance sheet expand. They create a brand new asset, which is the loan, and simultaneously credit the borrower's account, creating a brand new deposit liability. So, when a commercial bank approves a mortgage or a business loan, they are literally creating new money out of thin air. The Bank of England perfectly calls this fountain pen money, created with just the stroke of a banker's pen. Banks aren't just storage units, they are the actual engines generating the financial energy flowing through the rest of the economy. Picture a household putting their savings into a commercial bank. Instead of just sitting there gathering dust, that money transforms into active streams of financial energy. The bank issues new loans, generating derivative deposits, and this borrowed capital flows right out into the real world. This is exactly where financial intermediation turns static numbers on a screen into real-world productivity, jobs, and innovation. Millions of individual deposits are pooling together into one massive force of active capital. And this newly created credit, it flows like rivers across the globe, literally building the architecture of our growth. It's funding that tech startup buying its first servers. It's letting manufacturers expand their giant factories. Through sovereign and municipal bonds, it channels global savings into long-term public investments. Think highways, airports, hospitals, power grids, financing development way beyond what tax revenue alone could ever do. And for corporations, debt financing lets them scale up massively while still holding on to their equity. It's a brilliant system, really. Capital circulates just like a civilization's bloodstream, but it has a critical vulnerability that we absolutely have to understand, because this whole thing is built on fractional reserves and interconnected lending. What actually happens when confidence wavers? What happens when the circulation of this invisible machine suddenly slows down, or worse, stops completely? Well, when trust vanishes, the machine seizes up. In a healthy, flowing credit market, you have continuous investment, job creation, and economic expansion. But in a frozen credit market, which we've definitely seen during major financial crises, liquidity just fades. Banks stop trusting each other, lending contracts, businesses can't roll over their debt, factories halt their expansions, and unemployment spikes. The shocks ripple through the real economy with absolutely devastating speed. So the big takeaway here is that the machine's survival depends entirely on continuous circulation. If everyone panics and demands their cash at once, a classic bank run, or if banks just lose faith in borrowers, the engine of civilization stalls out. On the flip side, when confidence returns,
Banks start lending, investors buy bonds, and the machine breathes again. Growth requires trust, period. Which brings us to the system's ultimate safety net.
This is exactly where central banks step in. Think of institutions like the U.S. Federal Reserve, the European Central Bank, the Bank of Japan, or the RBI as this hidden control layer steering global liquidity. They sit right above the commercial banks. Through reserve requirements, they dictate lending limits. With monetary policy and interest rates, they actually steer the price of global credit. And most crucially, during a panic, they step in as the lender of last resort, providing that emergency liquidity to restore trust.
This really highlights just how much capability these institutions have. Like Andrew Bailey noted, the essence of central banking is their power to create liquidity simply by manipulating their own balance sheets. When the commercial credit machine freezes up, the central bank uses its supreme authority to inject fresh reserves, basically unfreezing the pipes and getting those rivers of capital flowing again.
But if we zoom out globally and look at the bigger picture, the landscape is shifting. It's not just a game of central and commercial banks anymore. Look at the wealth allocation across the G7. A massive 48% of all financial wealth is now held by institutional investors. That means non-bank financial institutions have actually grown to dominate this ecosystem, far surpassing traditional bank deposits. The scale of this shift is just mind-blowing. Trillions upon trillions of dollars pool into insurers and pension funds. And since these guys have super long-term liabilities, like, say, paying out a pension 30 years from now, they act as the ultimate deep market stabilizers. They are the giants absorbing massive amounts of long-term bonds, injecting a different but totally essential kind of fuel into the credit machine.
We see this exact same pattern in the euro area, where investment funds and debt securities make up the lion's share of total assets. And this massive pool of capital, it doesn't care about borders. It continuously flows across continents, linking major financial centers, from New York to London, Frankfurt to Singapore, Tokyo, Mumbai, Dubai, into one unified, integrated network. It is a truly global ecosystem.
Now, to handle all this incredible volume, the global ecosystem is constantly upgrading its tech. Innovations like electronic portfolio trading and fixed income ETFs are essentially massive upgrades to the system's plumbing. Instead of a broker trading bonds one by one over the phone like the old days, algorithms are now moving baskets of thousands of bonds instantly. During recent market stresses, ETFs have been absolute game changers, acting as shock absorbers that keep capital moving and accurately discovering prices even when traditional markets freeze up. All right, let's pull all of this together. If you were to look at the Earth from space, you shouldn't just see cities and borders. You should picture these glowing rivers of credit wrapping around the planet. Capital linking a household's savings in Mumbai to a corporate bond in London to a tech startup in Silicon Valley to a brand new highway in Germany. You can no longer look at these households, banks, governments, and markets as separate things. They are all absolutely vital nodes in one living, breathing, pulsing credit machine.
I want to leave you with this final thought. Money is just the medium of exchange. It's a ledger entry. But credit, that underlying trust that transforms today's savings into tomorrow's growth, that is the true engine of civilization. The homes we live in, the hospitals that heal us, the tech breakthroughs we rely on, they all exist because capital successfully circulated through this invisible network. So now that you can finally see this invisible machine, what piece of it are you building today?